Good morning, good afternoon, good evening, depending on the time zone. Welcome to this week update on our instrument. I'm your host, Peter. So we are going to look into what the market has for us in the coming week. Now, this is DXY. I'm starting with the weekly chart. So looking at this weekly chart, we could see what the candle has offered us. When you see candle like this, it's still, to me, a corrective pattern. We have not seen an engulfing movement from the candles. Now, we can see from this, in the last week, we had a bearish candle to the downside, and that was engulfing. And so far this week, we can see this body in the middle, the week below, the week above. That mannerism is what typifies a corrective pattern. So, but what can we see? So far, if I may zoom in, I like to dwell more on DXY because it's kind of gives us a direction into other USD pairs that we may trade. So far, like I said in my video last week, once we don't break here, we are at that level that I thought that if we don't break, this might just be the area where we may begin to go down again. So far, price had tested this resistance, and that is what we are getting. Now, between here and here, it is 50-50 for now, which means that price may resume to go back to the downside, or price may still go deep to the upside. Now, these are possibilities. Price may now continue to fall, or we may still have one more leg to the upside to correct without breaking this area of 100,566. But let's look at the mood on the daily time frame. The DXY on the daily time frame, we had corrected like a 5-wave structure to the upside, and we are getting this reaction without breaking this area. And I've said that ultimately this area may be a tough notch to break at around 105. So if we should break this above, it shows that we are bullish again on the dollar. And again, in terms of structure, what may make this move to the upside again unlikely? We have to look at the structure. We believe that we are done with wave 3 here, and this is wave 4, and we are to do wave 5. Even if it's going to give us an ending diagonal or a leading diagonal, we will see. Like in an ending diagonal, what we expect a 3-3-3-3 formation. All the 5 waves should be 3 waves. But in the leading diagonal, we expect a 5-3-5-3-5 formation. So the first wave to the downside had given us a 1, 2, a 3, a 4, and a 5. Then we add this wave to the upside, which is wave 2, a 3 wave, like a 1, 2, and 3 before we begin to go down. Now, upon descent, so far, what is apparent to me here is just 3 waves, which is a 1, 2, 3. Because it is a 1, 2, 3, I don't expect wave 3 to be 5 waves. If wave 1 had given me a 5-wave structure, I expect a 5 wave at least. But so far, we had a 5 waves. And so with these, what this may portend is may portend a more strong push to the downside, even if we're going to get one more top around this area. If this will go to be a more complex structure of an A, B, and a C, then we have a more, an aggressive fall from the dollar. That is what I expect without breaking this area. But for now, before we can say the bears, they are having their ride again, we have to break this candle here, this bullish candle. We have to break this limit of 98,180. So once we break that to the downside, we are resuming back to the downside. So on the daily time frame, it's not apparent yet, but on the weekly time frame, we know we are still correcting. That is what we can gather. And we expect, based on the structure that we should expect, that price may actually continue to fall from here. Price may actually continue to fall from here. These are to be taken first, and this is the next area. So once we take this area, is the first area to take to the downside. And once we take this area also to the downside, then price may, once we break 98, price has resumed bearish again. Otherwise, in between here and here, we may get a push to the upside. Once we break the top one more time, then we should begin to look for the count without breaking this area to fall. But for now, but I would say 60% to fall, 40% to still do one more leg to the upside. Now let's go to the euro dollar. The euro dollar, the same thing that I said. We look at this as a 5 waves, 1, 2, 3, 4, 5. For wave 1, the 5th wave built a leading diagonal here, and we have a wave 2, which is the pullback here. Then the 3 waves, 1, 2, 3, is the same thing. But so far, we've seen this an A, B, C. Of course, this may just be an extended flat, and the price may begin to go to the upside. A, B, and a C. This falling sharp to the downside connotes an extended flat. The reaction here, which is really opposing to what we saw on the DXY, looks a bit, impulsive. And the way the candle closed there, on this 4-hour also looks as if we're going to go more aggressive to the upside. The euro dollar had broken this structure here. We need to take this out. Once we take 1.15850 to the upside, then we are bullish again. Otherwise, we may still have one more leg to the downside. What we are correcting basically is not from here to here. We are correcting from here, which is the start of the second wave or the third wave. This is the first wave to this place, the second wave. The third wave is this, which is still incomplete to me. Because it is incomplete, that is why we still think that we still have a more bullish run to run. But in the meantime, if they decide to still come, they might still come down if they want to do that. If they push down more, that will be more aggressive to the upside. Very, very aggressive to the upside if that should happen, because that would have corrected this so deep, and the push to the upside will be ferocious if that happens. But again, I'm still looking at it that we may be doing, because the wave 3 usually is the longest of the wave. We maybe have done 1, 2. This may be another 1, 2 before we push up. So 60% to go up, 40% to still do a more correction around this area before we push to the upside. I think without breaking 1300, if that happens. So we still need to watch what the price is going to give us in the coming week. But these are levels to watch. Price coming to this area and breaking the low of here, price breaking 14,550, means that we are going down again. For price breaking to the upside, 1.15800 means we are ready to go. Now, The daily time frame, what does it suggest? Yeah, so it's still bullish so far on the daily time frame here. We can see the bulls 2 days in a row in a robot is still consolidating, so we've not seen the real movement. Let's look at the weekly. Yeah, most like a pin bar forming in that area. So this still looks bullish to me. Let's look at pound USD. Pound USD. We have to pay attention, pound USD, to what the price is printing. So inside pound USD, this kind of very on the weekly time frame, you can see the way this is. It looks as if we want to turn bearish, but you have to be very careful. There is no real movement from the bears. You have to be very careful. If you want to sell this, it's that you've been selling from the top and you are having a tight stop loss. Because if you look at the RSI has clearly shown, divergence as if price is going to fall. But the DXY moved. If we're going to have a more double correction, probably we should see price around this area before we go up, if we are going to. Otherwise, price may just continue to go up from here and break the top again, and to be dragging, and you want to sell without a stop loss around this area, price may drag you so deep into negative. But at the same time, these are levels if you want to buy, is there you are buying from this low level here, and we just start stop loss. That is what the mood I'm getting here on the weekly time frame. But going to the daily time frame on pound USD, what do we have? But mark you, what is still most important is the DXY to know what this is going to do. Now, looking at the daily time frame, here, with this price action here, and with this pin back occurring here, clearly shows that if this closes like this, price may put a bit to the downside, then go up again. So it looks more like the direction is towards the upside here, even from here. We may have, formed what we need to form here as, an extended flat here, an A, B, and a C. Breaking this low may just be enough, and price may continue to push up. But if you are buying from here, your stop loss must just be around this area, 133.8, 133.800 or thereabouts, and nothing more, nothing less. So in case they want to break down and still have a double correction that will come to this area. But so far from this price action, it looks so okay for us to go up if you are looking at it from the daily time frame. But on the weekly time frame, it looks bearish. But this candle in itself is what, these two candles is what is probably giving me this mood that price may begin to go up. Then, of course, we need to take out this area. Once we take out 135, 1.35, 800, we are bullish once again. If you look at it, so you need to look at the structure, the completeness of structure, and the candles formation and all of that. So if you look at the 4-hour time frame, you think, okay, price may still continue to go down and go down and go down. I don't see price even breaking. If price should break 1.34, 180 area, then potentially we may go up again. So the next one is Nzdusd USD. Nzdusd USD is kind of you can see this move had gone like 1, 2, 3, or like a 1, 2, 3. It's pretty much unclear for the price to have retraced almost deep to this depth. Shows that on this instrument we may fall more. So if you look at the daily time frame, the price action still shows clearly that this price may fall more. Looking at this kind of a shape of a candle tells you this is going to fall more. It's going to drop. So at the end of the day, we may be having, a running flat around this area, This may just be an 1, 2, 3 of an A wave, a 1, 2, 3 of a B wave. The extension here is around 1, 2, 3, 1, 2, 7 to the upside. So we may be expecting a running flat. It looks more like a running flat. We should expect price around 0.59400 or that area, probably without touching this area, without breaking this area, price may show, to go up one more time. I don't expect, with this formation, I don't expect an extended flat. I don't really think that price is going to come to this and break this, but anything is possible. But if this is a C wave, then we now begin to do our count of a C wave to see this as a possible one. The top of this green candle as a 2 to see how far we will go down to do a 1618 and where that will get us. But I think it's going to fall more. It's going to fall more. Just count this wave. 5 waves to the downside, and from that, the completion of the third wave, you may look for your buy to the upside. That's on the NZD USD. Then on the USD JPY. USD JPY is still kind of looking funny because it's been like nothing but a consolidation around this area. So the price may tick this area or break it slightly, and we should turn to the downside. And a complete break outside of here with 4 candle closing outside this peak here, then would reflect or confirm that these may be going deeper to the upside than would have thought. So that is what I'm saying, because we are taught that this is forming a triangle. It could still be a triangle of an A with this. This is like a 5 groups to the downside. After this, a zigzag here, or WXY. We had this to the upside and W and X and Y to the upside. So if they want to form a more complex correction, then this one become a bigger W, and this one become an X, and the Y leg may go more to the upside. Let me show you what I'm trying to say here, which is possible, because price potentially may rise another 400 pips. Let me show you. Now, we've had this A leg to the downside. This is the B leg is completed. We don't expect price to come up. Take this out now. But in here, we're going to have a more complex correction here. Then these may just be turned to an A, B, and a C, or a W, X, and a Y. And this Y, we expect it to take at least 100 extension to the upside, 100 extension to 1, 2, 3. That may pitch price around 150 area, around 150, 800 area. Around this area, you may now see price falling up to this area without breaking this dip, if that happens. But for now, we have to pay attention to what price we do here. Around this, you can see this here with that wick. Let's see how price is going to sit on top of this wick. Once price sits on top of it with a 4-hour candle closing across it, with the body, not a wick, the body of 4-hour closing across that place tells us that yes, price may only probably retrace to the downside. You get out of your sell, then wait for price to break this area. Price is going to break this area, but without breaking this area, about 500 or 400 points move to the upside, then we may come down. But again, price may just give us a first break out of here and begin to fall. The mood of the DXY would also, tell us what to expect. Otherwise, this may just continue to pull up like a 1 and a 2 and a 3 and a 4 and a 5. So we need to see all of that. We continue to watch and watch what price is going to do. So nothing is definite. This is a black market around this area. Black market around this area. If it doesn't sit, that's a sign. If it breaks sharply to the downside, then we are going up. If 4-hour candle closes across this, then you know that we are going up like 400 points speed. That's the best I can do for you here. The next one is Euro JPY. The Euro JPY on the weekly time frame still looks as if the C leg here may run a bit deeper. That's the way I'm looking at it now. May run a bit deeper. We had our entries around somewhere around this area. So yeah, just before we broke this area, maybe around 60 something, 166 something. Yeah, but now price is going up. This price may still go up beyond our entry by another 170 pips. It's possible. Then we are seeing this A leg. The B leg had formed a more complex structure of a W, X, and the Y leg may be running deep. So this Y leg, we are seeing a possibility of an A, B, C had broken an 100 extension, probably around 123, 127 extension. It cannot give us 120, 16180. It cannot give that before we know that, you know, it's over. But for now, that 123, 127 extension of this A, B, or W, X, Y coincides with about 76.5 of the old retracement. So that is where we should be expecting a reaction. So, but if at the opening of the market, we see a movement and a sharp fall, then the price is ready to fall. Well, it's ready to fall. It is completed. This structure is completed, but they may just drag up for another 170 pips. That is just what I'm saying, and that is what I'm seeing here. So stay where you are. Just hold your position. Stay where you are. It's almost completed for me. It's done. It's completed for me, but they may just drag a bit to the upside. Now, the next one is gold, which is the last one I'm talking about here. Gold. If you are trading gold, let's first switch to from the 4-hour time frame here. We are not seeing any real movement to the downside. This thing has been a messy structure. We had an ABC to the downside, a 1-2, a 1-2, it seems like, or a running flat. This area must not be taken. If price should break 32.95, then that is more bearish for us, that the price is going to go down and continue to now use this as an A or a W, X, and a Y to the downside. So this will be a deciding area for price to break, for us to have that ABC of a W, and X, and Y to the downside. But with this movement, we need price, this 4-hour price action, you know, needs to be consolidated for us to know that we are getting a more push to the upside. We need this 4-hour price action, and then we need to break this 34.03. In fact, we need to break this area, 34.22 area to the upside to confirm. The first indication will be to break this area, then come here to break this area. And once we break this area, then we are going up is super bullish. But for now, the mood of the market on the 4-hour time frame is what I've interpreted. On the daily time frame, you can see that price is just dragging. The bears, they don't have real pressure to force this price and to take. This is the area for us to take. Like I said, 32.95 area is the area to take. The price is being forced back to the upside. a break out of here, this greenish candle, which is on the day time frame 34.06, we are bullish. But on the 4-hour time frame, it will be 34.22. Now on the weekly time frame, if you look at the overall mood, we are still bullish. So this is corrective. This is corrective. So what I've just said is that this may just be a W and an X and a Y, but to make it a Y leg to the downside, I've told you the area to break. You cannot see it on the weekly time frame. Is it apparent? I think it's a bit apparent also on the daily time frame. Yeah, it's apparent on the daily time frame. This is the area, not this area, not this area. This area breaking to the downside, 32.95. Then we are actually bearish. You can only look for a retracement and a further fall, because that may mean that it's going to fall below here. But for now, this looks bullish. So tread carefully. Look at those areas the structure had marked. Can this still fall a bit? Yes, it can still fall a bit. It can still fall a bit. If price should go up, then take this out. Then it will make nonsense of this bullish candle. If price should come to take this out to the downside, I will believe it's more bearish, because a ray of hope is this candle in itself, which may mean that price may still correct to push up, but we need to take this out before we assume bullish responsibility. With that said, do comment, like, and push this out for more subscribers. If you are watching this for the first time, please subscribe, press the like button to promote what I do here. Have a great week. Bye.